Hi guys, in this video, I'm going to teach you how to record purchase invoices in Xero and their account impact. We'll start right from the Xero homepage for your organization. At the top right, you'll see a plus icon. This is your quick create menu for common transactions. Click that plus icon, and from the list that appears, choose bill. In Xero, a bill is the same as a supplier purchase invoice. It represents something you owe to a vendor. You'll land on a blank bill form, work through it from top to bottom so nothing gets missed. Select the supplier so the bill is linked to the right contact. Enter the invoice date from the document you received and set the due date according to your supplier's terms. If you have an invoice number or reference from the supplier added to the reference field, it's invaluable for searching and for audit trails. If you transact in multiple currencies, confirm the correct currency before you continue. Next, add your line items. For each line, type a clear description, add the quantity and unit price, and most importantly, choose the correct account. The account you pick determines how the cost is reported. Common choices might be an expense like office supplies or cost of sales, or an asset account if you're capitalizing something. Pick the appropriate tax rate so the tax is calculated correctly. If your supplier's prices are tax inclusive, toggle the settings so the totals match the supplier invoice. Add more lines if the bill covers different types of costs. Keeping them separate helps your reporting later. Once everything is entered, take a moment to review. Compare your subtotal, tax, and total to the supplier's document. Make sure dates, references, and account codes look right. A quick check here prevents rework later and keeps your ledgers clean. When you're confident the details are accurate, click Approve. Approval posts the bill to your accounts and makes it appear in your payables list. Here's what happens behind the scenes once it's approved. Xero increases accounts payable, creating a liability to your supplier, and it records the cost to the account you selected. If you chose an expense account, your profit and loss will show that expense. If you selected an asset account, say for a capital item or inventory, the balance sheet asset increases instead. The tax portion is recorded to your tax control account, so it's picked up in your tax reports. Your age payables report and the supplier's balance are also updated. Notice that your bank balance doesn't change at this stage. Cash only moves when you record the payment later.